All right. Good morning, everybody. Happy Friday and welcome to the final trading day here of the week. The final trading day for the next week or so as I torture myself with 10-hour driving days instead of torturing myself with the market. So maybe you can just say that I crave pain and suffering more than I crave a kind of a casual, right, lifestyle environment. Hopefully, no issues with YouTube. Should be fine. Yeah, let me know if there's any issues here. I'm getting a couple funky alerts, but yeah, hopefully it looks okay. I mean, from my perspective, streaming seems to be working just fine. But yeah, let me know, guys, if there's any issues or any concerns. Hopefully, you guys can all hear me loud and clear here as well. It'd be great if just the chat could confirm here. Sound is good. Video's okay too, Mike? No issues there? All right, perfect. So yeah, like I said, guys, last trading day here of the week before I make my transition here out west. And I mean, I think truth be told, I think it's really fair for me to acknowledge that I'm probably a little bit distracted here this AM. Maybe even a little bit like emotional, right, to a certain extent, ending like a pretty big chapter here of my life. Um, And yeah, obviously it's a pretty big transition, and certainly, right. Just want to acknowledge that because I think there's I don't know, maybe a decent chance, right, that those like emotions could become kind of like cloudy here today, right, or they could maybe hide from me, right, what I'm really actually feeling. Like they could potentially kind of act as like an invisibility cloak over some of the variables that I actually need to focus on here and control. And that's fine, right? That's totally a part of the game. We all have life, and I'm not saying this specifically here because I'm looking for sympathy or because I'm looking for an excuse to walk out of here. It's not really any of those types of things. But I just want to, yeah, really kind of just make that like pattern clear in my head, right? So that when I feel yeah, maybe a little bit more attachment or a little bit more ego or a little bit more whatever, that I know where the source of that, kind of feeling is. And I think that that's going to be, I mean, like I was talking about being proactive, not reactive, right? That for me is kind of what that means, right? I think also, I mean, yesterday was a really strong trading day, and it was a really strong trading day because just put my ego aside, right? There was no like needing a mega win. There was no needing the validation of a big P&L day. There was none of those types of sensations, and so that was an extremely positive, right, kind of technique and result. And building up that confidence, right, building up that proof of concept, showing that hey, it's okay to have a red day and then be able to bounce back, strong the next day. That's ultimately how you build confidence as a trader. And I do feel really confident here this morning, right? I do feel sharp. I do feel good. I have stuffed myself silly here with, yeah, like Craig is saying, from La Belle Province, right? I've eaten all the good Montreal foods that I could absolutely stuff myself silly with. So, Schwartz's for dinner last night, bagels for breakfast here this morning, a little bit of a smattering there in between. And yeah, obviously excited to be here, happy to be here, and looking forward to what should hopefully be a strong trading day. With that being said, right, if today's price action is kind of crappy, if it isn't like a nice kind of bit of trending PA, or it's kind of like a fake out, shake out, stress out type kind of day, then I'm going to be less incentivized to basically just sit and stare at a screen all day. And so obviously I'm not like in a rush to leave, but I'm not necessarily incentivized to like stick around and just stare at the screen here all day. So what I'm looking for here is for something to be easy. And if I can get that kind of easy, high conviction setup, then I'm going to put myself in a really good situation. If I'm unable to find those sort of scenarios, I'm just not going to waste any mental capital on price action that certainly just doesn't meet my criteria. Like I was kind of saying there, um, yesterday was a really, really strong day because I put my ego aside and was basically just taking my wins where they were, right? And maybe you could argue that I left some money on the table. Had I just taken that second trade and held it all day, probably would have made more money, right, than those sort of scalps. But from my perspective, I'm kind of proud of myself for not succumbing or falling for opportunities to be greedy, right, and to reward that muscle. To a certain extent, I think that's where I've had kind of some frustrations. I think with price action here in the last maybe 2 weeks or so, where those days where I get my greediest, those tend to be the days where I finish with just like the least amount of mental capital. I end up being exhausted. I end up being stressed out. I end up being snappy. I end up being stressed out Mike, right? Not stoic Mike. Maybe more similar to prison Mike, right? Than stoic Mike. And I don't like that variant of me. I think that's a person that isn't a good trader. I think that's a person that lacks empathy. I think that's a person that behaves selfishly. And that's not something that I particularly enjoy kind of showing, right? Or kind of sharing with you all. So from my perspective, it certainly feels like trading often is like you have to just suffer your ego death on a daily basis. And the second you start to think that you have everything figured out, Mr. Market likes to remind you that you're human, that you're an idiot, and that you love to self-sabotage. So, the counter to that, and I've said this before, I think is gratitude, right? It's being thankful for what you have, for feeling pride, right, in creating your freedom, in feeling satisfaction of behaving in control. And that is going to continue to be sort of my obsession here today and sort of what I honestly put all my energy into. Like I said, today's kind of it's kind of an emotional day, right? It's kind of a day where, life is transitioning here a little bit, but it's a day where I feel a tremendous amount. I feel tremendously privileged. I think today is probably the best way of describing it, and I'm very grateful, and I'm very excited, and I'm very happy, and I feel tremendously at peace. And so I want to make sure I maintain that energy when I'm trading here today, and I don't allow distractions or impulses or like negative self-talk to kind of like ruin this kind of sensation. So I know that there's a lot of me there, so it's a little bit of a selfish start, but from my perspective, right, I'm just really trying to be like the steady hand, right? Be um, uh, like I'm trying to be the thermostat, not the thermometer, right? If that makes sense. And hopefully, right, I can put myself in a situation to finish off the week here with a bang and really just have a strong trading day. Again, if I don't place another trade here today, it's still going to be a really strong week. It's still going to be a pretty impressive kind of week of performance. And like I said, I don't really have much to complain about. So life is good. Markets are always the markets, and I'm excited to trading with you all here today. And then, truth be told, I am excited for a little bit of time off and a little bit of time to kind of refresh, recharge, and kind of take stock, right, of where I'm at. I mentioned this a little bit earlier in the week here about how I don't think I'm necessarily proactive enough in how I manage my mental capital. I kind of work until the point of burnout, have a period where I kind of get like stressed and kind of get bitchy, and then have like a period where I reset. And so I want to avoid that kind of like former element, right? I don't want to get to that point where I'm feeling burnt out. I think that that's a really challenging place from where to trade. And one thing that I've definitely noticed in my trading career is that it's very hard to realize that you're burnt out in the moment. You kind of only realize it once you're able to take a step back and kind of take a little bit of a break. And I think there were definitely times here this week, just like packing up everything, signing all the papers, dealing with agents and all this kind of stuff, that I felt like at my wit's end. And yeah, it sucks, right? Like it's a terrible feeling. So not interested in basically rewarding that bad sensation. And again, right, be proactive, not reactive. And I need to be a little bit more proactive in how I manage my time so I can basically elongate those periods right between burnout. So I know a lot of stuff kind of went over there, kind of all over the place. Maybe not a textbook Michael morning rant, but yeah, I just want to say thank you to everyone, right? Good morning. Excited to be here with you all and really looking forward to having a fantastic trading day here with everyone. And yeah, guys, let's get after it, right? Let's have ourselves a great day. So yesterday, right, kind of a low volume move here to the upside, pretty much like a textbook trend today minus the volume, right? Nice little fake out lower there on that mean reversion opportunity. And then price action kind of bounced kind of all the way back up towards sort of those Wednesday's highs, Wednesday of last week, right? Where this gets interesting is that ES like literally closed one or two ticks below the Wednesday high price. And then kind of looks like a little bit of a fake out here this morning, right? And now we're sort of back within maybe the upper end of that range. So the question I'm asking myself here this morning, right, is if bulls were strong, why aren't they sustaining this momentum here higher, right? Why are we seeing a significant gap down here this AM? And, yeah, why do they keep losing basically their momentum, right? Every time they give us an opportunity where they should be the ones back in control. So I think that probably creates a slightly uncertain market environment for us here today. And I'm going to want to be patient, right? Be deliberate, be cautious. And if everything kind of falls into place, I'm confident it'll be a green day. If I choose to basically ignore some of those clues and I try to put a square peg in a round hole, I think I'm going to be white knuckling my steering wheel and cursing at myself for how I traded. So I'm not sure if that's a good move here around other Montreal drivers. So very just excited to be specific and deliberate here this AM. And the counter to that, right, is the more specific I can make my plan before I enter a trade, the less likely I am to experience bouts of extreme emotional volatility because I've answered the questions that give me stress. And so that's really what the plan is here this morning. The more that I can emphasize that, and the better I think things will go. So yesterday, really strong day. Really happy with how I traded. Really happy with how I took profit. And yeah, kind of going to look to repeat some of those same things. Saw some comments there yesterday, right, about how certain firms basically limit you from scalping in like the 10-second range. So yeah, just be a little bit careful around some of those restrictions. It shouldn't be too much of a bottleneck. I think it's going to be pretty rare that we have multiple trades that are kind of 10 seconds or so. But yeah, just something to kind of be aware of here, just in case if that is something that gets in the way. Obviously, don't want to be making any trades that impact anyone's potential payouts. And so we'll try to be kind of conscious of that here this morning. All right. So first things first, right? We got to check the economic calendar here this AM. I'm doing that on my watch, or sorry, on my phone. And today, right, we've got just consumer sentiment at 10 a.m. So relatively clear calendar here. And yeah, hopefully that gives us a nice bit of trending PA. So what's the count on ES? Let's start there. Let's fire through some of this prep. And yeah, guys, let's have ourselves a great Friday. And let's finish off the week with a bang. So what's the count here, team? What do you guys think? Yeah, 1 for 3 here to the upside, right? Mike, I think that's probably a typo on your end. But yeah, 1 for 3 here, right? So green candle, decreasing volume, gap down. So only one element, right, is telling us that bulls are particularly strong, and that's the candle color, right? Or that's the one element that's telling us that bulls are in control. So we continue to have a two-way tape, and we're effectively looking for one side to basically win that tug of war. Yesterday, there was pretty limited resistance there from bears, so maybe they come out of hibernation here today and are ready to maybe make another move here lower. Honestly, I think for your guys' sake here, I would prefer to see a breakout right above. I think that'll create an easier bit of trending PA for next week, especially as earnings season really kicks off aggressively. So that might be a scenario, right, that would probably be preferred. But I'm going to trade the price action that's in front of me, not the price action that I want. And then, yeah, from a target level, right, our pre-market high here is 55.50. So that's going to be my starting point here on like that opening range breakout scenario. So 55.50 as my starting point, right? Then we go 55.60. And then I'll just kind of push this up towards like 5,600. I don't need to be hyper aggressive here. Like even those small moves, right, can pay you out tremendously, kind of like we saw there yesterday. So I don't need to give myself like the expectation that it's going to be a 600-point day. That's not worth the emotional capital that it's going to take if it isn't actually there. To the downside, right, we're going to be looking at pre-market lows. So that's 54.90, right, is going to be our starting point here. And then we'll go down towards like 5,400, maybe it's a little bit more space than we have to the downside, but equal moves, right, tend to happen. So if the market wants to give you a rip in one direction, it often gives you kind of an equal move here in the other. And equal in this context isn't necessarily to the T, but generally, we'll call it a loose interpretation of the word equal. So like I said, we're looking for a 54.90, and then going down to like 5,400. So I'll go 54.80, just 10 points along the way, right? And I map out these levels effectively 10 points along the way to manage my greed, right? If I'm only targeting a move that's 10 points away, I'm not expecting myself or not expecting that trade to be like a $50,000 win or something like that, right? I'm looking at things to be more realistic, right? And if I can get further follow through, cool, I'll try to take advantage of that. But if I don't get that opportunity, I'm not going to allow my greed to let winning trades turn into losing trades. I was actually having this conversation with someone yesterday afternoon, and I think I realized like it was like a little bit of a eureka moment for me personally, just saying it out loud. But I think I know why those like green to red P&L trades are ultimately the most frustrating or the most tilting for me. I would say no, Sammy, right? We've been doing that 10-point range here for a tremendously long time. And it's pretty easy for me to get 3 points of risk-ish on ES for my entries. So I don't necessarily think that it was I don't think that necessarily impacts my ability to get consistent executions. But yeah, so what I was saying, right, about those green to red trades, right, is normally my max loss is set to be about $500 per account per trade. And when I'm up, say, $600, or I'm up $700, or I'm up $800, and then I go from being up $800 to taking a $500 loss, that doesn't feel like a $500 loss. That feels like a $1,500 loss, right? It feels like a more dramatic variant, right, of maybe what I expected. And so I think that's ultimately where that like frustration comes from, because it feels like I took 3 losing trades instead of just taking a loss on one position. And I think that's something that I need to acknowledge a little bit more aggressively, because the more I protect my wins, I think the easier it is for me to feel less stress, right, from losing trades. So for me, a very, very important thing to kind of acknowledge, right, is understanding that, okay, a green to red trade doesn't actually feel like a $500 loss. It feels like twice that, right? Maybe even three times that, maybe even four times that. And the reason I set my max loss to be $500 is because that's a number that I feel kind of rational and cool and calm and collected on. But having two trades that you go from green to red, okay, maybe you're only down 600 or $1,000 or whatever it might be, but it feels like a 3K loss, right? Or it feels like a 4K loss, or it feels like something tremendously dramatic. And I want to avoid that sensation as much as possible. So again, proactive, not reactive. And in this context, right, being proactive means being more aggressive in how I don't think I need to change too much. Like 19,000, right? It's going to be my initial target here to the downside. Then 18.9, 18.8. Right, and then to the upside, pre-market highs, we'll call that like 19.5. I'll go 19.6, 19.7, 19.8. Cool. Make sense? Hopefully. All right. CL, well, inside breezy there yesterday. High volume inside bar. Generally my least favorite type of pre-market setup. I hate high volume indecision. It's the worst decision, right? So I'm not super interested in that. It kind of looks like it's faked out that inside bar in both directions here already this morning, which is kind of a pain in the butt. So I'll basically just do this. But I'm going to be a little bit skeptical about trading CL here this morning, or at least not going to be hyper aggressive, and then I'll go from there. Okay, Apple, 1 for 3. Microsoft, 2 out of 3 with volume. Actually, looks like a 3 for 3 now. 2 cent gap up, monster move higher. I have to say, guys, I'm really looking forward to being back to trading on my PC. Can't tell, is that an inside bar? Okay, no, I won't call that inside bar. I'll call that a 2 out of 3 without volume. Okay, and then we got AMD, 1 for 3. So again, right, kind of a formal consolidation in NVIDIA. We're looking at a 2 out of 3 without volume. And then Amazon here, inside breezy. I don't know why I say it that way. Netflix. I'm speechless by Netflix. This thing, who doesn't own Netflix at this point? It blows my mind that this thing is so strong. Um, Pretty interesting psychological level here as well. But 2 out of 3 here to the upside without volume. And then old Meta looks like an inside bar. And Google. Big gap up post earnings, 3 for 3 here to the upside. Is Google going to save the market? Interesting. So yeah, in general, right, we kind of have like a little bit of a mixed bag narrative here on the indexes. They got really close to giving us that breakout there yesterday, but couldn't quite sustain it by like the skin of their teeth. And so I'm hopeful, right, that today we do get some separation either above, right, which I think is preferential, or, right, we do get that kind of aggressive rejection, which at least then defines a really kind of nice bit of range bound price action for us to kind of fall in love with. So that's really what the priority is here for me today. the priority is mostly focusing just on the mental side for me, right? Control the variables I can't control, be deliberate, be specific, don't trade with any regrets here today, right? Think about second order consequences. If I break my rules, if I act a fool, if I do dumb things here today, I'm going to be frustrated. I'm going to be annoyed. I'm going to be stressed out, right? Or arguably. And I don't want any of those sensations. Those are all bad consequences to what should be, like I said, right? Trading is my favorite thing in the world. So why should I add extra pressure on myself and turn something I love into something I loathe? That's not worth it. I think that's a prize that isn't worth paying for. And so if it isn't easy, I'm not interested in trading it. And if I can get good price action, then I'm just not going to allow myself to get greedy. And I'll be much happier to just take my base hits and to compound that 1% instead of needing that like validation of a big P&L day. I don't need that. My ego doesn't need that. And so I'm not going to feed it that type of bullshit here just to make myself feel better here in the short term. I think that's ultimately a trap and something that's not going to turn me into the trader that I want to be. So that's my commitment here to everyone this morning. And I'm really looking forward to trading with you all here today. And yeah, guys, let's have ourselves a heck of a trading day. Let's have ourselves a great session. Let's have a ton of fun. Let's kick off this, we'll call this like the final day of trading winter. Maybe that's a little bit dramatic. I mean, it's almost May, but it is Canada after all. But yeah, let's have ourselves a great day, team. I'm looking forward to trading here with everyone. And let's ride. So any questions here? All kind of makes sense. We feeling okay? All right, beautiful team. So I'm just gonna go quickly make myself a quick cup of coffee, give Ricky just a momentary belly rub, and then I'll be back here in just a minute, and we'll get going here for today's session. All right, so already seeing a CL bullish reversal alert here. Now, I'm not sure that's one I'm going to be hyper aggressive about. Not a strong enough candle shape, right, for me to be super enthusiastic about that. So again, I'm going to be a little bit patient here and a little bit cautious with those narratives. Early selling pressure on the indexes. Kind of been stuck in that like 11-point range here all week, kind of that 50-point range on NQ. So let's see if that does give us a tradable bit of PA. Now that gives us, right, an expectation like on NQ, right? If it's 50 points, Our opening range target right's 100 points away. That's plenty of space, more than enough room for me to make some money. So I don't need to be super aggressive here today. And I'm as much as I'm saying that, right, for you guys, like I'm saying that to remind myself here as well. Like I'm very much a person that feels or that behaves more logically when I can hear myself think out loud. If I think about one of the big benefits here of running the stream for myself is that I basically say all my thoughts out loud. And so I catch myself, right, when I start sounding like a crazy person, or like I catch myself most of the time when I start sounding like a crazy person, and usually realize that that's an opportunity where I'm not really behaving like a rational human being. And so it's the same thing, right? When I'm, um, telling myself here, hey, be patient, be deliberate, be specific, don't be greedy. That's a reminder here for me, right, to help cement that pattern so that I can more easily, right, avoid some of the tricks and the traps that maybe cost me some capital, and ultimately that's what's going to make me more successful here as a trader. So let's see how the day comes together. Let's have some joy here, team. Okay, so CL is giving us 5 min ORB reversal. Sorry, mean reversion scenario here. So stop loss would have to be lows, and you're looking at a move that's approximately 93 cents away. That's pretty big. So 63.39, right, would be our starting point. And the stop loss would have to be 62.32. I'd be looking at something like that there, right? That like 40 to 41 range as kind of a potential entry zone on CL. And that would allow me to buy 5 contracts. Geez, I mean, these CL alerts won't stop here. um, so this is, I don't know if you guys remember, maybe on what was it, like Tuesday or something. I felt like super high energy, and was like kind of like giddy and hyper, like from the coffees, right, that I was drinking. And so I purchased those same coffees again, and then I looked at the like nutrition facts of it. There was so much sugar in it that I don't think I had a caffeine high. I think I had a sugar high. Okay. So now we'd be looking at something like this: 62.43 stop loss. I've seen the spread already on CL be I've seen it be 3 cents. Now that looks like it might be a little bit of an outlier, but that is going to slow me down here just for a little bit, right? I want to watch basically how healthy this order book behaves. If I see those 3 cent spikes, that for me would not be an indication of really any serious amount of kind of health. What am I eating right now, Anton? Is that what you're asking? you guys hear me chewing? Hope not. But it's 9:38, so it's time for that first nicotine gum. Oh, sorry. That's gross. All right, I'm gonna wait out CL longer time frame. Be right back here, team. One sec. All right, apologies for that. All right, so I think focus right now is going to go towards the indexes here in the short term. Although I'm not seeing any like increasing volume breakouts here now. The expectation that I would have for volume to step in, right, would effectively be at that Wednesday high, right? So a breakout effectively above that blue line is probably where I would expect bulls or bears to show up with like an aggressive volume standard. So that's what I'm going to be cheering for here today, right? Or where my expectation is. I think if we're breaking down the setup, confirmation, execution criteria, right? The way that you want to think about your setup is where on the chart, where based on an indicator, where based on however I'm doing my technical analysis, do I expect to see more bulls than bears or more bears than bulls, right? I think that's ultimately what I would define as a setup. Where is my most realistic or reasonable target where I can expect momentum to step into price action? And I think that can be incredibly flexible, right? I mean, I think there's a million ways to do that, but as like a retail trader, I can then wait for that confirmation to basically prove that my thesis is correct and then look to execute that trade. I don't need to front run basically any setup triggers or any like half-baked setup triggers. I don't think that that's particularly sustainable. But yeah, I would expect, right, that Wednesday high to be like a support zone or a resistance zone. And if I could get a rejection there on volume or a high vol breakout right at that spot, then I set myself up for some good success. Okay, did a good job here avoiding CL. That little spread, right, difference. I even just saw it there, 2 cents. That for me, right, tells me that the order book isn't particularly populated. And if a trend is strong, right, you would think that the order book is pretty full. So kind of an interesting start to the morning here. And I'm not looking at this like particularly scientifically. I'm just looking at do I ever, there's 2 cents again. Do I ever see moments, right, where I see the spread behave differently than I expect? Right? Normally I would expect the spread to be tight, 1 cent, right? One tick, 1 point. And so when it doesn't do that, or I see multiple scenarios where it like hovers at 2 or 3 cents, even maybe 4 cents, it just starts to flash warning signs for me, right? Like if price action is strong, the spread is going to be tight because the executions are competitive. If price action is weak, right, especially on these hyper liquid contracts, then that's a really big red flag. Like ES, NQ, and CL are like 3 of the 4 most traded assets in the world. So if you're seeing an inconsistent order book on something that should be literally hundreds of thousands of orders deep, there's something suspicious going on. I don't know. Sometimes I feel like a trader. Sometimes I feel like I'm Nancy Drew. I don't know which one makes me more money. Or maybe if you want to go proper old school, we're the Hardy Boys. Solving the mystery of terrible price action. Yeah, still no increasing volume standard, right, since the opening first candle of the day. So maybe a little bit of like a bullish exhaustion set up there. Yeah, same here, Mike. Yeah, same here. When I was growing up, I was allowed to read the Bible and the Hardy Boys. Those were the only books I was allowed to read. Okay, so probably not going to get increasing volume there. Maybe on ES, maybe a little bit more likely. Not by a lot. Let's see. I don't think we'll get there, but yeah, didn't go increasing. Almost, but almost isn't good enough. Yeah, so I would think so here, Ajay. For me, the main point of resistance here that we're looking at is basically that blue line. So we're looking at that Wednesday, the 9th, right, high of day as acting our support because price action hasn't been able to really sustain any moves above, or it's kind of just like consistently behaved here as a rejection spot, right, for price action. So I would push that up by about 20 points. And playing a breakout only towards like that 55.23 approximately, I don't think that juice is worth the squeeze. Or you're just setting yourself up for a pretty violent rejection at that area. Turtle twins. I've not heard of that, Mike. I'll have to look that up. If this thing could lose 5,500 here to the downside, then I think you're in probably really good shape here, Ajay, for that downside rip. So I'm going to take back my comment here a little bit. I'm going to refresh it. I think you're spot on. It's really good support here for a downside move. And then if we're looking for an upside move, we basically want to see a breakout above that upper end of that range, which we'll call 55.20. Oh, Tuttle. Oh, my bad. Clearly, I need a bit more education if I can't read the difference between those two words. For a second there, I thought you were peddling turtle soup, the uh, strategy that some guy keeps claiming he made on Twitter. It was very clearly stolen from someone else. from like a Linda Rushke or something like that, I think her name is, the inventor of it. And there's a guy, Romeo, who pretends it's his concept that he's, God's gift to the earth. I can't stand him. What a prick. What I will say, right? Markets have basically behaved the same way always, right? Like candlesticks were invented by a Japanese merchant, right? From, I don't know, maybe 1,000 years ago. And those same patterns have played out year over year, right? Day after day, month after month. So this idea that there are like universal or like new concepts available in trading, I think is kind of fugazi. So it makes me laugh when, yeah, people take credit for something that's been around for 50 years. Cracks me up. Okay, interesting. I could probably play CL here to the upside. Now we're not going that far this time. Be doing something like this. So 62, 62. Stop loss 62.46. No, stop loss would still need to be the pullback technique here. Again, being patient here this morning. I mean, this time yesterday, I already had 3 trades. So this feels weird. Okay, I don't like that little gap up. That's a bit annoying. Interesting. What's the time? 9:51. We got data at 10, consumer sentiment. So it's not like the biggest deal. But that looks like a fake out lower first. So I can pass. And then same thing here on ES. ES maybe a little bit more likely. So I could go the aggressive and still kind of have decent position sizing here. Whoa. 7 points. That's $350 a contract. To be a one contract play there on ES. I think that's going to slow me down here just a little bit. Let's see if we can get just a proper breakout. But yeah, that 5,500, really good shout. And then just CL, right? The reason I'm filtering it out is because our target needs to be 62.62. So right now, price is 62.53. I've got 9 cents of upside. That juice isn't worth the squeeze. All right, so we're going to have setups here in 50 seconds. All right, so right now we have an active setup trigger, right? Our setup trigger is a separation away from the opening range. Our confirmation is going to be a close under on increasing outlier volume. So as long as these candles don't do anything obnoxious, we're going to have an opportunity here. All right, so I'm going to focus on NQ here, team. And we're going to want the aggressive technique ideally here. It's 234. So it might have to be. If it is going to be a 300 stop loss, right, that means that my entry has to be around 75 or better. So that blue line or better, right? So my limit order price short is going to be set here at 275. I'll call it 276, actually just round it up. And then I'm going to look to basically enter in, right, on a discount above that blue line. It's the objective. So everything is set up here, one contract. Let's see if this thing can start to behave nicely. Okay, so watching closely here, about 10 points. Okay, so watching carefully is close. Okay, watching. Oh, might have just missed that 278. See if it tries again here. Okay, still watching. Come on. It's not going to give me an entry there. Okay, still about 10 points away. And yeah, our old friend CL, Hit our 62 and then got stuck. So, okay, good decision. Okay, so at this point, right, we have 90 seconds till market data. I'm going to wait till data here at 10 a.m. If price action can continue to basically consolidate here inside this range, then that 10 a.m. data has the chance to give me basically that overreaction move into my entry zone that I'm looking for. So I'm going to be waiting this out, right? Just another buck 15. Because I'm just setting myself up to get faked out, right? On potentially that headline. I don't want that. I mean, I will say that, like, to a certain extent, subconsciously, I really want my first trade here today to be a win. So I would rather be too patient, right, looking for that perfect opportunity versus too aggressive looking for that opportunity. Again, that 278, 280 area would have been a good entry here so far, but hasn't moved like a significant amount yet to say that factually. So 30 seconds. Let's see. And so I still have everything set up here, right? This thing, could give me just a quick little pop, and I have to be ready to pounce on this, right? Okay. Yeah, good thing we didn't, right, guys? Good thing we didn't. No worries. I mean, look, $100 there to start the move. It's fine. But yeah, good decision. Really good decision. Huh, that would have been annoying. So now we have a fake out higher and a fake out lower. Not ideal. And okay, right? That acknowledging that, hey, I want this to be green, let me slow down and be more conservative actually saved me money, right? Being hyper aggressive with that trade likely would have led to a $500 loss. And that would have sucked. So yeah, good decision, team. Good decision. Hey, appreciate that, Mike. We'll see you in a week, buddy. Good luck with your daughter. Okay. So no entry here on NQ. No entry. Okay, so we have a breakout scenario here again. So for now, we're still looking at the pullback technique. I would prefer the aggressive. Well, let's see. You need about a 280 entry, right, to be within sort of that 25 points range. So that would be the target. Oh, it's cold. Again, so now I'm watching for a long, right? We have a breakout here to the upside. I won't be able to trade this on the aggressive entry technique, at least not on this time frame. So if it does make a higher high here versus our confirmation candle, then I'm going to switch this to the 5 min and see if I can get an opportunity there. So still need about a 35 point pullback on NQ to justify the the pullback. Again, inside bar does not invalidate this setup here yet. So still in business. We saw this give us a pretty nice bounce off of 300. But still need about 40 points of pullback to justify this entry. Excuse me. Okay, so still watching here. Problem with the aggressive technique right on this is the difference between the high of my confirmation candle and my implied stop loss is more than my 25 points. Right, give or take about 33 points. So still being patient here. Oh. 1 second here, team. 1 second. You hear me? There it is. Okay. Sorry about that. Okay. So again, still looking at the now aggressive entry technique if I can get it. Okay. Pretty quick mover. So let's see if this thing can pull back here just enough. It needs to be under 75, right? Ideally, a little bit higher than that. Or sorry, a little bit lower than that, right? Okay, so I'm watching here, guys. I am watching here. Everything's set up. One order. Sorry, one contract. You need 74 or under. Okay, so I'm watching here. All right, guys, I am in. Average price 368.25. One contract 368.25, and immediately flying here. So let's see if this thing can get through 400. 368.25. One contract long. Stop at 349. Okay, I've closed this. I don't like this pullback. I am out at 376. 376. I will try this again potentially on the longer time frame. And that was for a quick 150 bucks. But I hated that little failed rejection right around 400. It started to pull back faster than I was comfortable with. So just take my win, reset, try again. I'm unwilling to flirt with disaster here today. If the trade is strong, it'll give me multiple chances to enter, right? As is here. So again, can retry this again. Can be looking at a 382.50 stop loss, called 382 on the dot. So now give me a gentle pullback here again. Too fast. Better reaction. Don't like that. Okay, no entry. Stop would have to now be 367. So let's try this thing again, potentially. I'd be looking right around there. Again, that trade would have shaken us out right before giving us this move and arguably would have still been under our entry price. So not missed out on anything here. Okay, so still watching. Too fast so far, too fast. Much better bounce. So it's got to get back up above that blue line, right? And then a gentle pull back into it. We've not seen the gentle pull back into that blue line here yet. We're kind of seeing like the elevator go in both directions. Okay, good decision. I think if I'm thinking out loud here, that early sign right in our first trade where it felt like it got stuck at around 400 or just under 400, we haven't really invalidated that feeling here yet, right? Which I think has made it just a little bit easier to maintain just like an element of caution because all the price action we've seen since that close at 376, right, has been one of basically bounce up, bounce down. Yeah, well, Jeremy, if you're up $300, just walk away, take it, and run. That's nothing to complain about. Again, so we're still not quite dead here. Our stop would have to be like here, right? 352. Should make that approximately the entry zone. Okay, so again, watching here carefully. Okay, that was a great bounce. Let's see if we can get a little pullback here. Okay, guys, I am in 368.25. Stop 352. So let's see if this thing can rally here. Took the stop, took the stop, took the stop. Okay, 1 for 2 here to start the day off. So minus 280 on that approximately. Okay, so minus 130 here on the day so far. Okay, back to looking at potential shorts. Bearish engulfing candle, bearish engulfing on volume. Stop would have to be 362. Which means I would need an entry around 336-ish. Not going to happen. Boo. Ooh, yes. Oh man, shame we just missed that entry. Didn't give us a pullback there. Okay, 40 seconds to go. Right now it is AJ, yeah. Previous candle, maybe not, but failed breakout, right? And then reversal. I'm okay to look at it when it's just slightly under outlier in that context because I've seen bulls fail. I saw bulls fail multiple times there at that 400. But yeah, there was definitely a sliver of space between. 100%. Won't argue that. Okay. What was that? 253, 285. So from profit target to stop loss, need to do something like that, and then and that's still 37. So be looking at 342 as an entry, short. What is the old ES doing? No, not so much. It's definitely a little bit of a choppy start to the day, but enough volatility to expect still some follow through. Second biggest volume there on that dump. Interesting. Again, an inside bar here doesn't kill me. It doesn't invalidate me. Mm-hmm. 10 seconds. Let's see how this shapes up. 53. So we can't see this go really above 78. It immediately goes above. Hmm. There's an argument to be made that the entry is here. 15 points. Hey guys, I am in short here. I am in short 274. One contract stop 285. Good entry. Let's go. All right, so immediately flushing. Watch this reaction here around low of day. This is our most likely spot where we're going to get faked out. So if it can flush through, we're in good shape. If it doesn't, I'm taking it and running. Okay, guys, I have closed that trade at 256.25. I have closed that trade at 256.25. For plus 355. So good start here. Good start. 2 for 3. Some small, nice, quick little wins. And yeah, very good decision, right? Once it started to lose that enthusiasm here around those lows, get out, right? Our most likely spot we were going to get faked out was near that low of day. Didn't get emotionally attached, took it and run. Love that. Yeah, I'm trying to keep it as zoomed in as possible here without screwing up the distortion. Okay, good day here so far, team. Good day. And a good decision to close where we did. Maybe could have gotten a little bit lower, right? And closed it when it was like $500, but that was a good decision. And the reason why that decision was easy, well, I didn't think I was going to get a pullback into that area. So the way that price action was behaving within that situation, it kept feeling as if it was rejecting here, right, post inside bar. So like around that 284 area. And we kept seeing it give me that elevator down. So I had the idea, right? Okay, I go really tight stop here, approximately 10 points. I'd be willing to take that risk that, hey, I'm going to be correct on this entry. So it was a little bit contextual in this situation. I don't often use I mean, still stop loss high of my entry candle, right? So it's like a variant of the aggressive entry technique. And it was just once we made that lower low through that inside bar, it started to feel like as if it was going to break down. Now, I would have shaken us out right before it makes these lower lows. So again, no issues, right, with how I made that decision. And again, if this thing might set back up here, a breakdown here under low of day, I'm going to be in great shape to turn this into an even nicer day. But just taking my base hits here so far. And just being methodical. So it was the aggressive entry technique, right? Once it made a lower low here through that inside bar, I would say 90% of the time, I'd still be waiting normally for it to break down under the confirmation candle low. But intuition there kind of told me right from price action that, hey, this is going to start to sell off, or this looks like a spot where it's ready to dump, because it kept rejecting right in smaller and smaller ranges. And my entry was pretty much perfect. I was green almost instantly. So maybe a little bit of an outlier entry. So I maybe apologize if that was a little bit confusing. But I don't think at first glance I broke any rules there. Does that make sense? Oh, is that a reversal scenario now? I'm just playing the range. Good Lord. It's like I'm playing tennis against the wall. It just keeps bouncing back. Equal move up, equal move down. Outlier volume here. Maybe I could play that reversal back towards high a day now. Oh, whoops, wrong one. Still would be the pullback technique. Looks like it has made a higher high. So again, right now here, aggressive entry technique. And so you're looking at a 96 or better as an entry. If it doesn't happen on the 3-min, it's going to give me a very similar setup here potentially on the 5. Okay, watching closely here, team. Okay, sweet. I'm in 295, one contract, 295, stop loss 272. Okay, I don't like this. It's got to get back up above 300. Okay, nope, I'm out. Close price 296.25, 296.25 close price. Bad reaction to 300. So again, reset back up, right? Decreasing volume on the 5-min, so can't do it. And that was a $25 win. So gas money here today. So again, right, market is dictating our hand here to a certain extent, right? It's not rewarding us for holding out for these monster massive wins. So I think we did a really good job there, right? Yesterday, setting the expectation of closing our trades the second it doesn't feel like it's behaving the right way. And that saved me a lot of money here so far today and a lot of mental capital. If the trade is strong, right, it'll give me more than one chance to enter. So I don't need to build up stress to accumulate P&L. I'm actually more likely to accumulate P&L when I mitigate my stress. So just a little bit under $300 here on the day per account. And I don't think I made a bad decision there. Price action is not separated in any significant amount here yet. Obviously, famous last words as this thing now starts to rip. And again, I would always rather be too cautious and get impartial than too aggressive and be burnt out. So we've done nothing yet here to invalidate our confirmation signal. So maybe I could still look for that opportunity here to push higher. 316 stop loss. Looking at about 16 points as is. It's pretty reasonable. Okay, so watching here carefully again, just one contract here, right? Just looking at one contract. Yep, good bounce. So let's see if this thing can pull back just a little bit. All right, sweet. So I'm in 327, in at 327, stop loss 316. So 11 points of risk. Yeah, 327 on the dot. And maybe not a perfect entry. So let's see if it can run. Beautiful. Okay, so watch this reaction now here at 350. Come on, get over. All right, there it goes here, team. Looking good. There it goes. Nice, nice, nice. Okay, I have closed that trade there. Exit price 355. Exit price 355. Beautiful. So 560 on that trade. And boom. All right. Almost 900 bucks here on the day. Good job, team. Yeah, that's why we were looking for a long, Ajay, right? Because that 300 was acting as support. So we were continuing to basically play off of this same thesis, right? So we got high volume separation away from the low of the opening range. We saw 300 act as support, and we had our stop loss right above that area. So we were anticipating this to continue to push higher. Nice work, Vinny. So not bad here so far today, right? 3 for 4, one good win, couple of scratches in between. Can't complain about that. And yeah, just the second it started to feel like it was stalling, right around 350, close that trade right as your P&L is increasing. And what I'm trying to visualize for myself here, really as much as possible, is how can I identify even like what might be a ludicrous point of resistance, so that I'm not surprised if price action stalls or gets stuck, right? Because generally, if I'm surprised by a reaction, it's hard to accept that, right? So really, really strong start here, team. Really, really strong start. And yeah, I'm quite happy right now. How's everyone feeling? Thank you very much, Vinny. Well done here this week. Congratulations on finishing the day nicely green. And yeah, have yourself a heck of a weekend. Everyone feeling good? I know it's maybe a little bit frustrating with the scalping because things move very quickly, but we really have to take advantage, right, of just the market conditions that are available to us here right now. I don't think that this is an opportunity, right, to hold for monster wins. So Matt, tell me, I find I'm not staying in the trade long enough. What do you mean by that? So is it that you feel like you're constantly leaving money on the table? Are you panic closing the first time you see green? Break that down for me if you can. Yeah, this is very much price action where you have to detach your ego from your P&L here right now and just really focus on being technical. And I think I'm doing a good job of that here so far. Okay. And are you green on the day? So the question to ask yourself here, right, is would it have been reasonable for me to have expected to continue holding these trades? Was there any reason to have gotten out? Because ultimately, I'm not going to complain too much about taking base hits. Now, if you're taking like $20 wins, right, and you're setting yourself up to take like a $200 loss, okay, now we need to have like a little bit of a conversation. But we're effectively closing these trades when we're up about 1 hour here at the moment, right? So I'm trying to almost like use my I want to be careful how I phrase this, but almost use like my win rate as my margin of error here. And that only works, right, if my average win, average loss are about the same, or average win is just a little bit bigger. So if you have any stats on that, Matt, you could email them to me. We'd be able to maybe break that down in a little bit more detail. But I would say from a personal perspective, right, how I feel about price action here so far, I don't feel as if there was any reason here yet where I should have held on to any of these trades for longer than I have. Maybe a few little micro points here and there, but I think we've been closing them within like a reasonable high or a reasonable low. So positive from my in my opinion. Because I think the feeling, right, of now being like dealing with this pullback after that little fake out would probably feel worse, right, than the feeling of going. So 1R, right, is going to be the difference between my entry and my stop loss. So in this trade, right, entry, okay, it was maybe a little bit prematurely. It was 327. So I was risking 11 points. So once I'm at 338 and price action stops behaving, I'm in really good shape, right, to be able to take some profit off. So in this case, right, I was risking about 200 bucks, called $220, and I closed that for like 560. So I got 2R there, right? So R is the difference between your entry price and your stop loss in dollars or in points. So it's always relative to what the difference between my entry and stop loss is. And then that 25 points max risk is, we'll call it like a guideline, right, for position sizing. So, okay, anywhere under that 25 points, I know I can buy at least one contract, right, or get the position sizing that I want. Because that doesn't mean I have to be the appropriate. Yeah, I mean, I could argue that maybe we have a little bit of a bull flag. I would like to see probably a few more points of contact, right? Generally, my rule of thumb is I want to see 3 points of contact on like trend line resistance. So I would say for now, you probably kind of have two without necessarily a very obvious third one there at the lower range. Yeah, I do get what you're saying. If we can get a breakout from that, great. Yeah. Yeah, if I'm going to break out from a flag, it needs to occur on increasing outlier volume to basically trigger, right, a setup out of a consolidation breakout. It's weird. Or maybe it's not weird. I feel so much calmer the more deliberate I am with my trading plans, right? The more detailed I get in my what I'm looking to see, right? The more like I don't know traffic signs, right? That I'm looking out for when I enter my trade or before I enter my trade. Easier it is for me to be a rational and profitable human being. I think when I get too like pot committed to it, oh, it needs to go to my white line or it needs to go to my upper profit target. I almost get like comfortable in holding out hope that it's going to happen instead of trading the price action in front of me. Where trading the price action in front of me is always more profitable. And clearly, right, it's a much better win rate. Like 3 for 4 here today, 5 for 7 yesterday. So 8 for 11. Like if I could do that every day or every week, I'm buzzing, right? And all things considered here, team, we have navigated this chop very, very well. Like this price action on Wednesday, I mean, Ricky would be hiding from me right now, right? My poor little dog, he'd be stressed out. So I feel pretty happy with how I've traded here so far today. How's everyone feeling? Everyone feeling good? Everything kind of makes sense how I've been describing things here? Any questions, concerns, fears, hopes, aspirations? Anything there that I need to be aware of? Excuse me. I don't, Antonin. I haven't tracked the difference to be honest. I'm not sure if there would really be a tangible difference, right, in the outcome because when I back tested the opening range breakout technique, right, I was back testing for the probability of the next candle being the same color as my confirmation candle, right? So if I have a bullish setup, is the next candle bullish? If I have a bearish setup, is the next candle bearish? So I don't think that that would change regardless if I have the bullish or if I'm using the aggressive or conservative or the pullback technique. I think it would be the same or like a negligible difference. So now, right, I would say it probably looks a bit more like a bull flag here on the upper end, right? That volume has gotten anemic. What I will say in general, the difference I would say between the pullback and the aggressive technique is that it's easier for me to get smaller risk on the aggressive. Like I would say that that is its primary benefit. So, realistically, right, if you have tighter risk, you probably also increase your probabilities of getting faked out a little bit. I mean, there's pros and cons to everything, right? But in general, I think if you give yourself enough data, you're able to smooth out the variance a little bit. And that just makes life easier. So what I will need here, right, if I'm going to be interested in playing this flag breakout here to the upside, is I would need a candle that closes over 363.25 as my setup trigger, and then confirmation would be a breakout on increasing outlier volume. And then from there, right, depending on where that candle's low is, right, that'll depend really where I'm looking for my entry retest. So generally, right, I'm looking for my confirmation candle high or confirmation candle low as kind of like my general point of contact. So inside a flag context, right, you'd imagine that those 2 points would intersect at the sort of upper trend line. But I don't want to. I don't like getting too pot committed to buying off of a trend line because all it is it's just a line on a screen, right? Like it means nothing until you see volume, right? Basically break out through or past those areas. And once you get that volume breakout, that's kind of like it's only a bull flag then, right? If that makes sense. So until I get that high volume reaction to my lines on the screen, I don't want to put too much stock into them because who knows, right? How many other people have the same idea here? So for me, right, generally seeing a trend line or a breakout like that, that becomes a reason, right, for me to think that volume could show up and defend this idea. And then if volume shows up and defends, I should have a opportunity, right, to basically find an entry inside that zone. And I won't have to be as picky. But yeah, what we're getting here now is just chop up, chop down, chop up, chop down. Maybe even call this like a little head and shoulders pattern, right? Like that maybe is kind of how it's behaving. So far it's been pretty much a day of just consolidation. Now, if we're going to invalidate this head and shoulders, right, it's a breakout above 405.50, right, or a breakdown here under low of day to basically indicate, yeah, it is cracking. I also think objectively it's 10:58. I'm having a nice trading day. I don't think I need to do anything else. As much as I want to keep pressing and keep making money, all the price action here is telling me chop, 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 chop. And I don't want that. That's not fun. like yesterday, right? We took that one rejection there near the end of day, last trade of the day, and we gave back, $300 of our P&L. Yeah, Joe. So there's a bunch of ways that you can execute futures here to basically mitigate your margin requirements. My recommendation would be to do that through a prop firm. So what prop firms will allow you to do is they'll get you capital to trade with, which will effectively give you that leverage without any downside liability. So if you take a trade, right, and it doesn't work out, um, you're only responsible for the evaluation fee, not the actual loss that you take on that position. So from my perspective, right, that would be the way to trade futures here. As you build up your account size, that would ultimately, I think, be the most cost effective and most cost efficient way. And then, yeah, you could trade MNQ, right, which is micros. And so the margin requirements in your personal account will be 1/5 of what's required for NQ. And I think in general, I'm going to speak for Canada, but for NQ, you need about 20,000 USD worth of margin to be able to execute one contract. So I would, yeah, think about prop firms. That would be the primary way to do it. If you haven't spoken to your DTR advisor, yeah, talk to them about that. They'd help you get set up with that, no problem. So yeah, team, any other questions here this morning? I don't see myself doing much else here today. Pretty happy with the session. Any questions here, team? Any questions? Anything I can help you with? I am not. Oh, in the SPY. So if I'm looking for long-term portfolio additions, let's get rid of this. I'm looking to basically buy in or around a retest here of these previous lows. I think that they're still coming. So I've got kind of like a decent chunk, right, left allocated that I can use to purchase there. But I've effectively been kind of averaging down, right, or average down for a good chunk of that move. So I don't need to deploy too much more aggressively. But if I get another retest at or under 492-ish, yeah, that'll be a spot where I'm looking to really load up aggressively. Yeah, you too, Hansel. Have a great weekend. I do, Jeff. Like from my best bet on what that Wednesday rally was right? Wednesday the 9th, is that felt like a classic bear market rally. And the fact that even after all that momentum, price hasn't been able to sustain higher, I think is a little bit of a concern if you're a bull. But it's also, it's a 10% bounce from the lows. So it's like, maybe I missed it, right? But yeah, I would say probably my expectation is probably in the next 2, 3 months, it has a pretty high probability of retesting. Yeah, pretty good day here today, team. Sounds good, Jeff. Appreciate that. And yeah, pretty happy with the session. So no complaints. So final call for questions here, team. Final call for questions. Thank you. Appreciate that. Thanks, guys. Yeah, here's hoping that I don't get too many speeding tickets. Hell yeah, I'm excited to be back. Yeah, all next week. Um, uh, Maybe very briefly, Jeff, but not for enough time to stop. Basically, I'm trying to rush to go meet up with my dad on his birthday on the 30th. So that's sort of my priority. Go see my pops and hang out with him a little bit. Wish him, and yeah, head out. And then I get my internet installed at my new place on the 2nd, which is the Friday. And then hopefully, can build up my office over the weekend and stuff like that. Yeah, no stream next week. Correct. No stream. So, I mean, I think taking a little bit of well-deserved time off, and I mean that for everyone too, right? Um, like I said, right, it's hard to realize how burnt out you are until you take a little bit of a step back. And it's one thing that I'm not very good at is forcing myself to take time off. So I'm not saying that you shouldn't trade next week. Go for it, right? Have a great time, trade safe, be responsible, right? Think about what we've learned here this week. But I also wouldn't hold it against any of you guys for like just taking a little bit of a reset. This has been a chaotic market for the last month or so. And I think, at least for myself, I know I'm going to come back feeling very refreshed and energetic and excited. Maybe not excited about the 5 a.m. wake ups, but everything else is going to be epic. All right, team. So have yourselves a fantastic week, right? Trade safe, right? Be responsible. If you have any questions, obviously, feel free to send me a message. I'll also be checking email and messages and Discord and stuff like that. So I will do my very best to get back to you as soon as possible, likely in the evenings, just as I park up at my hotel or Airbnb or wherever I'm staying along the way. But if you guys have any questions, I'm always available for you all. And yeah, guys, have yourselves a great, great week. And Yeah, guys, it's the official goodbye of East Coast trading and East Coast hours for a little bit. So you guys, yeah, you guys are all here for the close of the chapter. So I appreciate you guys all sharing this with experience with me. I'm sure you're all sick and tired of hearing me talk about my move. So looking forward to getting that done and out of the way. And really, really, really good trading here this week, team. Right? I'm proud of us. I'm proud of the improvement we've made, and I'm stoked to see all of your guys' success in P&L. It's a lot of fun. It's really rewarding. And yeah, looking forward to catching up with you all here in the next little bit and just, continuing to build on some of the skills we continue to excel at. So have yourselves a great rest of the day, and I'll talk to you guys soon. Peace.